Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody, welcome back to the analysis of the Forex markets from the ForexPeaceArmy.com. As usual, we'll continue to discuss the situation on the currency of Euro Union and start from the daily time frame. Well, on the daily time frame still, there's not a lot of new events that probably could happen during the previous trading session. We see that market is trying to continue move to the upside when starting to move out from that consolidation tight range that has held during the previous three trading sessions. Well, right above this consolidation, above this current market, stands the starting point of the weekly conference resistance is 135.05. That is also the significant monthly Fibonacci resistance level. So 3/8 resistance from the whole swing to the downside. Well, inside, just slightly above this level stands 1618 extension of that retracement. That also will be the resistance that stands around 135.40 area. This red dash line is 135.71 is the weekly period resistance one. So you can see this is some kind of the era of the turbulence, since this will be first hit by the significant monthly resistance. Next could be resistance of that retracement just slightly again. Slightly higher, again this weekly period resistance 1. Also 136.24, slightly below that target, stands the weekly period weekly resistance level, another weekly resistance level. Well, and finally the 100% extension stands right here, A, B, C bottom, 618 slight consolidation, 100% extension. 136.72 is right here. Also 137 is another monthly resistance level, so that is really tougher area for the market to pass through it. So I think that inside of that there is some retracements and some growing of the volatility is possible. Well, on the 4-hour time frame, I would like to show you just a simple picture. You can see that market starting trying to continue move to the upside. That is red line is the Jordan-Napoli MACD predictor indicator. It shows the trend. When the price stands above this red line, trend is bullish. When it stands below it, trend is bearish. And in general, the crossing of this red line by the price chart coincides with the crossing of the MACD lines. But the MACD predictor allows us to see something that simple MACD doesn't. At least it's very difficult to catch this moment on the simple MACD. What we see? Since price stands below this red line, trend holds bearish on the 4-hour time frame. But take a look that price action absolutely doesn't support that. You can see that market is forming higher lows, except maybe this one retracement, and continue gradual move to the upside. So that is some kind of the pressure, and Jordan-Napoli called this bullish dynamic pressure. It suggested at minimum the taking out of that highs and probably continue move to the upside to some destination. Well, and also it suggests the shifting trend on the bullish side. Also, maybe you could ask about those stop grabbers, and you can see that the market by this kind of trying to shift move trend to the upside but failed. But here it's very difficult to comment particularly with this pattern, because personally I do not like such kind of patterns when they appear in such situation. Well, I prefer to see the stop grabbers in the direction of the previous move. But these stop grabbers fails more often than when they form in the direction of the trend. So that is very difficult to say will it work or not, but in general I prefer to focus our attention on that pattern, but I suppose that it will be more powerful than that potential stop grabber. So it's very probable that market will continue move to the upside. Well, hence our task for today's trading session is to find some pattern that could show us the levels where market could start some pullback, some retracement or something, because market now is approaching to the significant area of resistance, and it's very probable, even if market will hold there's bullish sentiment and will continue move to the upside, well, very probable in that area some pullbacks, some choppy price action. On the hourly time frame, first of all, I would like to discuss the trading plan that we have discussed formed yesterday. So we said that probably market, by reaching the significant area of resistance, was in agreement with that ABCD pattern, and 618 will show its respect. And if even you enter short from that area and will be wrong, you will have a lot of room to place your stop to the break even. So that has happened. You can see that market starting move to the downside, you was able to place the stop on the break even, but later it returns back and continue move to the upside. The same we said for the confidence support that we have discussed yesterday around that area. We said that if market will reach it, probably will show it respect and continue move to the upside. So that has also happened. That's why the moving stop and the break even, when the market is forming some contradictory patterns that will not and could not change the overall picture on the higher time frames, is very useful tool. So let's take a look where we are now. That is some kind that could appear, that pattern, some kind of pattern that could appear on intraday trading session. This is the butterfly sell, butterfly sell pattern. So you can see that both targets, S127 extension 135.21, S1618 135.63 stands above the 135 over 5 level. Also we have in intrinsic ABCD pattern, A, B, C bottom, 100% stands 134.87, 1618 135.47. So hourly trend, you can see, holds bullish. So what's the problem with this pattern? The major problem that I see is this pattern, A, B, C, D. Because take a look, the 100% target stands lower than the previous swing high. It tells us that market could reach that level and turn to the downside. In that case, this will be the Gartley's triple to sell, and probably market could show some deeper retracement or start some retracement to the downside with that great ABCD pattern or something. So one thing that we would like to see, if we would like to trade it on the bullish side, and you want to take some profit from that anticipation of the butterfly, you need to see the move above the swing high and holding above this level. So this could be the just wash and rinse, so that high market could return right back. So you would like to see that market will break that top and hold above it. Only if this will happen, you could count on some continuation rather to that area or that area and trade this butterfly already on the short side of the market according to the theoretical rules of the trading of harmonic patterns. So if you are bearish, you would like to see the opposite. So you would like to see either reversal to the downside from that level, after that ABCD, and trade this pattern at the Gartley's triple to sell, or what is maybe will be even more preferable, you would like to see the wash and rinse, so market will take out that highs, grab the stops that have been placed above it, and returns right back. This will be also the bearish sign that probably could point on the potential move to the downside. But it will be more safe if you will enter on the short side of the market when the hourly trend will shift on the bearish side. In this case, it will be a bit more safe. But currently, in general, trading the current situation is not a simple task by some reasons. First of all, because although the trend and overall sentiment on the daily time frame holds bullish, market stands near significant resistance, and in general, this is not very comfortable to enter on the long side of the market, right below the significant area of resistance. From that perspective, it's a bit not so comfortable to enter on the long side of the market. From the other side, to enter short currently is also it's a bit early, because we do not have any complete patterns that could let us to enter on the short side of the market. This is the first moment. The second moment is that overall sentiment on the daily time frame is still bullish, and we will have to trade against the major trend if you would like to enter the short side of the market. That's why the current situation in trading, as on the long side as on the short side of the market, suggest some higher risks than when you trade in different situation. Well, so but that's why I suggest that we probably should focus on the levels that we have just discussed, watch for the clear patterns, and I suppose that the most safe environment to trade, most safe pattern to trade, is to wait to complete into this butterfly, because in that situation you will be a bit with more confidence could take a look at the short position, because market will enter in some solid area of resistance. Also you will have some reversal patterns on your side, so that will be a bit more safe to enter short by completing this butterfly. But that's my personal opinion. Well, and personally I think that I will focus purely on the trading of the butterfly, but this will depend on your trading plan, on your view on your market. That's just my view. Well, you could use it, you could not, so trade according to your trading plan. And I hope that this discussion of the current situation on the euro currency will be useful today for you.